How to never lose money in the stock market. One of the easiest ways to make a lot of money in the stock market is to use a strategy that uses a combination of technical and fundamental analysis. One common mistake people make when it comes to investing is they buy stocks without fully understanding their fundamentals. They might know what the company does, but not the other factors that affect its stock price, such as how much debt it has or its current volatility. In order for them to avoid losing money, they have to take the time to understand these fundamentals and use this knowledge for their investments. While the stock market is booming, it is important to recognize that market fluctuations are inevitable and will happen periodically. To minimize your losses, you should prepare for the worst-case scenario that includes protection against major market crashes. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now, subscribe to our channel, and click the notification bell to be notified when new videos are released. Financial investment is a tricky deal, and this is especially true with the stock market. As such, it's important to be careful about what you invest in and how you handle it. There are many ways you can avoid losing money in the stock market by using a technique based on both tech and fundamental analysis strategies. One of the most difficult tasks to accomplish in investing is to know when to sell off stocks and when not to. No matter what type of company you're invested in, there will be times where the market reflects a bearish sentiment and you feel like it's time to sell your stocks. With this in mind, we'll take a look at some strategies that can help make sure that you don't lose money. As soon as you're able to recognize these signs, it will be easier for you to protect yourself from losing money as a result of what's happening in the market. The 8 essential rules for never losing money in the stock market. 1. Do your research. Investing in stocks is one of the most important financial decisions you will ever make. It can have a major impact on your financial future. However, it is sometimes difficult to determine if the stock you are considering purchasing is truly worth it. In order to make a sound investment decision, it is important to be well informed and aware of the different factors that can help you predict if a company will succeed. Educate yourself on the market. Know how to collect data and evaluate the risks involved in your investment decision. Before investing in any type of company or industry, do some research into that company's history and what it does. Identify their target audience and find out what they're looking for in order to make an educated purchase decision. 2. Set yourself up for success. If you're interested in investing in the stock market, it can be a daunting task. It's easy to get overwhelmed by the stacks of paper, the calculations, and all of the information you need to process. However, there are some basic steps that you can take to simplify your life and get started on your investment strategy. Many investors want to invest in the stock market and make a profit. But due to the high risks involved with this type of investing, most people don't make it. But if you find ways to avoid making costly mistakes and take advantage of learning opportunities, you can easily succeed in the stock market. If you know that you're going into a bullish market scenario, then try to invest funds before the prediction hits 100%. If you're not sure when anything will happen, then invest towards when markets are expected to be at their best. 3. Cost averaging. Cost averaging is a strategy that involves buying more shares when they are low and selling them when they are high. This strategy allows investors to accumulate large amounts of stock without paying a hefty price in the short term. The strategy also prevents an investor from making a loss because even if their investment goes down significantly, it will still average out to a small gain over time. 4. Have patience. In the stock market, patience is a virtue. This is because it takes time for a company's value to grow. In order to be successful in investing, it is important to have the right strategy and a long-term vision. Patience refers to waiting for a significant price change before getting involved in a trade. The main idea behind this rule is that investors should be patient enough not to get into or out of the market at the wrong time, which would lead to losing money. Investing in the stock market is a risky proposition, but it could pay off if you are patient. Buying low and selling high will require patience. You might not see the profits in the short term, but over time your investments will grow. 5. Diversification in the stock market. The stock market is the perfect example of how many different types of businesses can coexist. It gives investors the opportunity to invest in companies that are similar to each other yet still have unique differences. This makes it difficult to predict exactly what will happen with any one company, but it can be predicted to some extent based on what has happened in the past. Diversification as a strategy ensures that your investments in multiple shares of stocks with different values and companies spread across different industries and sectors. Diversification is an investor's best chance of avoiding losing money because it helps them invest in different stocks and sectors, minimizing risk while maximizing potential gains. 6. Take consistent risks in the stock market. Taking consistent risks in the stock market can be a difficult task. The market has an inherent volatility that makes it difficult to predict the future value of an investment for sure. This unpredictability can lead to extreme losses or gains. However, if you are patient, careful, and take small steps, you can start to make progress towards your financial goals. The key is to take a risk when the odds are in your favor, and when the potential benefits outweigh your potential losses. There are basically two ways you can look at this. Either the risks are worth the rewards or they are not. The key to maximizing your returns in the market is to be consistent in taking risks and following through on your decisions when it comes to buying, selling, and timing your trades. 7. Keep your emotions in check in the stock market. In the stock market, emotions can sometimes have a negative impact on one's investment. People often get carried away with the excitement of making a profit and lose their emotional balance. This leads to risky investments, poor decision-making, and financial loss. Traditionally, investors are encouraged to rely on their intuition. However, this method of decision-making can lead to faulty predictions and poor investment decisions. Research has found that emotions are tied to the brain's decision-making process and can ultimately impact investing outcomes. In order to keep emotions in check, experts recommend 3 things. It may seem like an impossible task, but experts say it is possible to keep your emotions in check. You may not realize it, but your emotions can be quite powerful. If you find yourself becoming unreasonably emotional in your investment situations, here are 3 steps that experts recommend for keeping your emotions in check. The first step is to take a break. The second is to look at the bigger picture. And finally, it is important to spend time thinking about why you feel the way you do about that particular investment. It is important to be able to keep your emotions in check when investing or trading on the stock market. If you get too attached to a stock that does not perform, you may end up losing money and time. It is important to make decisions based on facts and not feelings. Remember that even though stocks can go up and down, they don't equate to your emotions. When the market is booming and your friends and coworkers are telling you how great things are going, it's easy to get swept up in the excitement. It's important not to get caught up in the hype of the market. 8. Know when to cut your losses and walk away in the stock market. The stock market is a complex, fast-paced environment where there are many opportunities to make money. The stock market can be a tricky business, especially if you are inexperienced. There are also many opportunities to lose money. Stock market investing is most successful when you know when to cut your losses and walk away in the face of adversity. This is especially true when things are not going well, and you are not up to date on the latest financial news or have no clue what you should be doing. There is no better feeling than picking up a stock that has surged tenfold in the span of a year. There are also times when you should cut your losses and walk away. These are the times when you might see the bottom of the market, and it's time to pull the plug and cash out. Sometimes making a quick decision on when to sell your shares in a company is better than holding onto them for too long. 9. Understand your risk tolerance in the stock market. Finding your risk tolerance is important when investing. The process of understanding your risk tolerance begins by determining what type of investor you are. Whether you are a novice or professional investor, it is important to know how much risk you are willing to take in order to make the most out of your investment. There are many different opportunities available to investors of all levels of experience. However, different risks have different returns. Understanding your risk tolerance is important, so you can determine which type of investments best suit your needs. Being aware of your risk tolerance is an important step to protect yourself during market volatility. This awareness is crucial to continue investing, but it is also important to be prepared for the worst-case scenario. 10. Start with low-risk investments like index funds or ETFs. The economy is in a precarious state right now. As a result, many people are hesitant to invest their money, and the stock market is showing signs of volatility. The good news is that you can still invest without risk by starting with low-risk investments like index funds or ETFs. Investing is a complicated topic that often leaves people feeling overwhelmed. It can be difficult to know where to start, especially when there are so many options for investment. In the past, people would invest in stocks and bonds, but recently the popularity of index funds and ETFs have grown. These types of investments can be a low-risk way to start investing, and they allow investors to invest small amounts of money so they can grow their investment over time. Investing in an index fund or ETF is a great way to start investing if you don't have the time or expertise to pick stocks. These low-risk investments can be easily purchased and can allow you to grow your money passively over time. Bonus tip: how you can avoid losing money in the stock market with value investing strategy. In the stock market, as a company grows, it becomes more difficult to maintain a constant stock price. There is a natural tendency for investors to buy stocks with lower price tags and sell stocks with higher prices. This is referred to as value investing. Value investing has been proven to be effective in the stock market because it allows investors to have a better understanding of how the company works and whether or not its growth will be sustainable. In order for value investing to work, you need research on which stocks are good investments and what companies do well under certain circumstances. You also need patience so you can wait for those opportunities that will provide value in your portfolio at an affordable price point. Conclusion on how to never lose money in the stock market. There's no secret to success in the stock market, even though a lot of people think there is. Knowing when to buy and when to sell is crucial, but there are other things you should consider before investing in stocks. Although there are a number of ways to make money in the stock market, there are also a few ways to never lose money. There are many strategies that can help you make money in the stock market. One of these strategies is to focus on the right stocks. This strategy does not require you to be a professional trader or have extensive knowledge about the stock market. All you need is a little bit of patience, some experience, and an understanding of what your goals are for investing in stocks. As a final remark, I have mentioned the importance of being prepared for any market fluctuations and how it is important to be in tune with your emotions. So there you have it. If you enjoyed this video, smash the like button now, subscribe to our channel and click the notification bell to be notified when new videos are released.